This is Scott Becker with the Becker Business and the Becker Private Equity Podcast. We try and bring you information about investments, startups, and a lot more. We're going to discuss this morning three stories that we're following, and thank you for listening. First, the markets keep rising despite the government shutdown. Markets again point up slightly this morning. The Dow and the S&P closed at record highs last week. The S&P 500 is now about 15%, 14.818% year to date. The NASDAQ is up 18% year to date. Second and third are sort of related to this concept of the markets rising. The second concept is, will there be an AI-driven crash? Increasingly articles about fears of a $1 trillion AI bubble, that bubble is growing, and then risks of a crash. Again, OpenAI, which is a fascinating company, seems to be investing and invested in by almost everything. And so you've got this sort of very interesting question as to whether this is all real or whether it could sustain itself, and we'll see how that goes. There is a great piece by David Einhorn, who's a short type guy and a hedge fund manager, sort of negative, founder of Greenlight, and basically says there's a pretty good chance that there'll be a tremendous amount of capital destruction through this cycle. We don't disagree. We'll see how it goes. Third, there's more and more discussion about letting rank and file investors invest through their retirement plans in private assets, alternative assets, private equity funds. The idea that ordinary investors investing in alternative assets will solve the retirement crisis strikes me as absolutely ludicrous. This seems like a narrative written by the Blackstones of the world and their communications and lobbying teams. A big article today in Yahoo Finance. Are private assets the answer to retirement savings shortfalls? I would tell you, no, it's not, but we'll see what happens. Thank you for listening to the Becker Business and the Becker Private Equity Podcast. Thank you very much for joining us.